Welcome to this week's Commodities Digest, a focused deep dive into the latest moves and setups across key instruments. Today's agenda includes oil and the breakout potential, plus top energy names ExxonMobil, Chevron, and ConocoPhillips. Natural gas and its technical alignment for a possible leg higher. The uranium combo, URA, CCJ, and Quad U, and where the signals diverge. Gold, silver, GDX, and GDXJ. The candles are whispering at top. And yes, even coffee. A strong attempt, but is it enough? And today we start with oil. So today's closure was fantastically bullish, and I would say that oil is set for a continued ride, a continued rally upward. So the daily candle is clearly bullish. We have a 2-day which is forming a bullish candle, but will be closing on Monday. And the weekly closed with a strong inside up candle. It would be even stronger if it closed above this one doji, but nevertheless it's very strong and has very solid technical support. Just 2 days ago we had a strong 15-day bullish engulfing, and right now we are seeing that oil develops higher prices. So technically we are expecting oil to be bullish for the next week or maybe 3. So that's the candles perspective and the technicals too. Now let's have a look at the Elliott wave. So this is a combined chart with Elliott wave and classical patterns that I just updated. So there is a possibility that oil formed an impulsive wave upward and formed a wave 2, and now it is forming wave 1, 2, and potentially starting wave 3. So it took it a fairly long time, almost a month, to trade within this rectangle, and now we have a clear break. If this break continues, then we have this particular pattern. So the next target would be here, the next rectangle, so 67, the next one would be 71, and for wave 3 it's around 69.70. That's the perspective from Elliott waves combined with the perspective from classical patterns. So far I'm seeing it as a bullish development. Now let's have a look at another way of looking at it. So just a few days ago I discussed this potential flag that oil formed on June 2nd. Oil was about to form, and it looks like the flag is complete right now. So now we have a target 70 to 66 with an ideal one for 68. So when it happens, I don't know, maybe in a couple of weeks oil would arrive here. But now we are looking for a different pattern which is being developed. If we look at this from the perspective of a double bottom, which is oil right now is sitting on the neckline, if it moves a little higher, maybe backtests it and advances towards the flag, I would say that the double bottom will also play its game, and this would be the target for the double bottom. So now remember 72, 77, and let's move on to the previous chart, 71, 67. So this is clear overlap. Let's see how it plays. So far we have 2 clear targets. Now let's talk about Brent. Brent is also bullish, and it climbed today strongly above the 50 days moving average with all chances to move higher. Technical support is just enormously bullish. I would say that it could be a very strong rally. For the 5-day frame today, in 1 hour 30 minutes, it is closing with a bullish candle, technically confirming a reversal on this one, and again with a strong support, and the weekly, which is closing on Sunday, most likely is going to be bullish too. Now let's speak about, I'm not presenting today long-term charts for WTI and Brent. It looks like, considering recent changes, they might need to be reworked. And I started this work and it takes a while. So, and at this point, I'm still looking for several signals to confirm the idea of reversal. Once it is done, I will be sharing it with members. Now let's talk about energy trio. So ExxonMobil, Chevron, and Conoco. For Exxon, it looks like it is finding a good support at the 200 weeks moving average. This is the weekly chart, weeks moving average, and so far the candle is kind of bullish, but still closer to neutrality. If it moves higher, if the price moves higher next week, we might see a strong confirmation. For Chevron, this formation is clearly bullish, and we had a Harami combo, bullish combo, and now it's technically a confirmation of bullish Harami. So the next move would be to break this resistance line, 8 weeks moving average, and go higher. Speaking about Conoco, it's still developing, so potentially this is a Harami, bullish Harami, but it requires a confirmation. So I would say that among these three, Chevron is the strongest at this moment. Let's see how it closes bigger frames in the next week or two. So, all in all, oil is bullish. Now let's talk about natural gas. Natural gas today made okay, so it's closed already, and it made an amazing move. Yesterday I just discussed that it needs about 2.36 in order to make a bullish move, and today it closed just 0.002 above the high of the previous candle, which makes it a perfect rising three methods and a clear bullish engulfing of the final one. I think natural gas is set to fly, and the weekly frame is also closed with a strong bullish inside up candle, which is an equivalent of bullish engulfing from that perspective. Now let's have a look at the chart. No changes as I was expecting. This is going to be wave 3, and based on what I seen just now on the daily candle closure, we might see a very strong rally here toward this target or higher. Well, now so that's all for natural gas. Everything is clear. Natural gas is bullish. Now let's talk about uranium. So uranium is a bit more complex, and not all instruments are aligned. But let's start with URA, the Global X Uranium ETF. So the message is fairly clear here that daily candle is bullish. It just closed, what, a few points? Yeah, 2 basis points above the high of the previous candle, and the weekly also closed with a bullish candle. Technically, uranium is set to move higher, and this is the chart that we discussed way back in May, about a month ago. And by the way, those who went long on this call would already made about 25%. So I think that this wave is about to get reversed, but there is no strong move yet, and I am technically technically this URA is prepared for a reversal. However, we need to see a trigger. And if we look at this particular wave, I think that it might push just a little higher here before we see a reversal, before we see a pullback for wave 2, because wave 1 is already stretched fairly significantly. Well, that's the perspective. Again, I would like to emphasize there is no signal about reversal yet. So far the odds are bullish on the daily and weekly. Now let's talk about Quad U, energy fuels. I think that this is going to be a bullish consolidation, technically, because we have two failures in a row, and the price is still sitting above all major support lines. And the daily candles for, and it still holds about the 200 days moving average. For the weekly, it looks like it is a strong bullish harami and the freshly made 8x20 EMA weekly bullish cross, which is a very significant event. So this is going higher, and I think that this is perspective path for Quad U. This is what we discussed in April. We had wave 1, 2, and after that wave 3. So far it happened wave 1, 2. It took a little longer, and now it is developing wave 3. I think this is the perspective. Now let's talk about CCJ. CCJ is bearish on the daily and the 2-day frame, so potentially this is the strong setup for falling 3 methods. However, at this point I cannot say it's a super bearish, so we might see a pullback here, but I'm not sure it's going to be very strong. From the weekly perspective, the candles here are somewhat neutral, and there is a good, I would say it's a 50-50 chance at this point to go either up or down, so it's not clear enough. So for, let's say, for the next week, I would expect the early days, a few first days of the week would be bearish, but later on we will see what kind of candles it develops and what kind of signals we get. Speaking about the longer term chart, the Elliott wave chart, this is the most concerning chart among the three. So we had a wave A down, potentially. This could be the entire correction. Possible, very possible. And this is the wave up. However, I would say if we see a reversal without hitting an all-time high, there is still a chance for Chemical Corporation to drop down towards here, towards 30, and then only after that move higher. However, this red count is also on the table. I would say that the red slightly better. I would be even more comfortable if CCJ makes an all-time high first and then drops down. So in this case, we would be looking for red path as a primary. So that's for uranium. As you can see, it's not everything is aligned. So each chart on their own. And now let's move on to the next, to the precious metals. And today we start with gold. I think we have quite a few concerns here. So let's talk about it. So on the daily frame, we have a bearish candle. We have on Thursday, it was a bearish harami. And now we have technically a confirmation of reversal on the daily frame only. For the 2-day frame, that was an attempt to form a tower top, but it wasn't very successful, I would say that, and we need to see a bigger picture, bigger frame. So there is still a chance, but it's not very strong. Speaking about the weekly, Weekly had a very good chance as of yesterday, for example. If it closed yesterday, it would be a strong bullish continuation. However, we see a strong rejection, and now this hammer is elevating bearish odds, but not significantly for calling everything bearish now. So far, this is neutral. Potentially, you can see that on the weekly frame, gold technically develops already for 2 months horizontally. Let's see when it breaks the major support line. Speaking about the 10-day frame, which it could be the next critical point for us. So the 10-day frame is closing on Tuesday, and in order to continue the rally, this frame needs to close about this level, 38.133. If it doesn't, then this red candle, it is a bearish engulfing. It continues to remain in effect. And I would be looking for a potential falling 3 methods or advanced block or a combination of both for gold. But it is slow. Every candle takes 10 days to form, and if it remains like this, then another 10 days, another 2 weeks of a similar move up and down, and only after we might see some strong movement down. So just patience required here. Now let's talk about Elliott waves. I would say this is a bit more concerning than the candles itself, because we see a strong move down. So this wave upward is technically broken, and it's no longer impulsive. One more move here, and we might even consider it as a truncated ending diagonal. So far, the purple and red counts are they are a primary, and this is just a bigger picture. So this is potentially wave 1, 2 for red, and this will be wave 3 for an A, B, C for purple. It will be somewhere here. So far, it's that we don't have a fairly clean data for targeting it, but I'd like to say that on the 4-hour frame, gold formed 3 black crows. This is not a healthy sign, and it could be the beginning of something bigger. Just be prepared for this type of move. Now let's have a look at the bigger picture. It remains unchanged since we charted it on May 16, and I am looking for 2 potential counts, either blue one, which would be the lucky path, or the red one. I discussed it already before, and no points of discussing it again. Let's talk about the momentum. So this is slowly curling down. The 3-day frame closed with a, no, it's not closed today. It's still on track and can possibly close with a very strong bearish engulfing, and this would happen on Monday. So very interesting to see how it does. And the 5-day frame, which is closing on Tuesday, if it closes with a bearish engulfing, then I would be looking for possible falling 3 methods here and a MACD bearish cross, which would strongly elevate bearish momentum. So far, this is unhealthy development. Now let's talk about the GOD gold trust. So the red candle today confirms this top here. And if we look at the bigger frame, it's also a confirmation on the 2-day frame if it closes like this on Monday. So for 3-day frame, also very strong potential for bearish engulfing to be formed on also on Monday. So today is June 6th. And on the weekly frame, the concern remains gold GOD had a chance to break through the spell of bearish harami. However, it was rejected, and right now balls in the bear's court. Better chances for bears to continue down. However, they need to confirm it first. So this is for gold. As you can see, tons of concerns. Now let's talk about silver to see whether silver is aligned. So very interesting candle today, a very strong. Technically it breaks, finally breaks the bearish odds here, and the chances to move higher from the candles perspective are significant. However, I would like to say that this move higher, this break, was made at a very big cost. So the candle went over Bollinger Bands, and we know how unhealthy this could be for silver. For example, these two moves here resulted in a big candle down. And if I look, for example, at the daily frame, it's even more concerning. We have an entire candle about Bollinger Bands, but if we switch to the 2-day frame, and if we change this to 3 standard deviations, we can see that the 2-day candle traded a lot above the 3 standard deviations. So the probability of trading above this level is 0.15%, which is almost zero technically. And once we have a stretch in to the one side, we have a strong move to the other one. The last time, and I think that was mostly the only one, when I saw this, it happened here in January 2021. So the 2-day candle also traded above 3 standard deviations. And you see what happened after? This is, let me measure it just to give it a perspective. So after a stretch like this, silver lost 41% in the period of 579 days. Well, a year and a half. Well, that's the perspective of trading above the Bollinger Bands, especially when it's 3 standard deviation. Well, that's an interesting statistical element, statistical data. Let's see, let's hope it's gonna be different this time. Well, now let's move on. So the next barrier to cross for silver is to confirm a reversal on the 10-day frame. So while the weekly is technically bullish from the candles perspective, on the 10-day frame it's still bearish, and it needs to close to hold about this line for the next 4 days, and the closure will be on Tuesday. Well, that's an interesting data point, and we will be monitoring it very, very closely. If for any chance that silver drops below this line on Tuesday, well, this would be a big, big event. Now let's talk about potential Elliott wave. So this last move technically prompted me to reevaluate the wave, and I did it only for the midterm. Or long term is still due, and I am planning to do it for the weekly update on the website. So this is the wave that started in September 2022. Potentially it is close to completing. This is 1, 2, 3, 4, an ideal, almost ideal channel. Wave 3 is very nice, no overlap here. And wave 5 right now, I think that from Fibonacci perspective and few other estimates, it is somewhat between 36.5 and 40. That would be the target for it. So 36.5 and 40. Well, if it reverses here, then we would be looking for a significant decline towards 29 and somewhat between 29 and 24, 25. Well, that's the perspective. And but let's see. So we have right now a stretched technicals, and but the candles are healthy so far. Let's see what happens to silver over the next week. And now let's talk about SLV Trust. We discussed it already yesterday. So we have 3 unhealthy gaps and the trade above 3 standard deviation. Discussed it yesterday. So far, the weekly candle, make it bullish and pushed it way too high, above Bollinger Bands, and this might be costly for silver. So I would like to say, just let's be very cautious about the potential move for the metal. Now let's talk about the GDX miners ETF. So what they are telling us with candles. On the 1 day, on the 2 day, we have very strong bearish reversal combos. For the daily, it's a Harami, confirmation of Harami. For the 2 day, it's even stronger. It's a tower top, and it's a very clean tower top. So the chances for moving lower are significant. And if we look at the weekly frame, well, a gravestone doji. By the way, GDX had a very good chance to overcome this big bearish engulfing that it made in the middle of April with a closure at this week high. However, it lost steam, and right now it is sitting with a super bearish candle. And also this formation is not bullish either. So be prepared for a move down. This is the chart that we discussed before, starting on April, and after updating it. So there are 2 possible paths here, and there are quite a few tricks. So if this is a blue one, then we have a return to the level of origin here, and potentially to the level of origin of the big blue diagonal, 1, 2, 3, 4, 5. So 21.52. Well, this wave up is also a diagonal. So now, if this is a double, then we might see like a drop like a stone here in just a couple of months. However, if this could be also a green pass, so this could be wave 1, 2, wave 3, and the wave 3 is way too complex, I would say. That's had one, it had one ending diagonal, leading diagonal, another ending diagonal, and one more ending diagonal. But for the wave to stay healthy, it needs to hold this line, 36.26. If it crosses it just by 1 day basis point, well, the green pass will likely be invalidated, and we would be looking for a drop towards 21.52. So far, I would say this is the potential target for the move that we are seeing right now. And by the way, it's gonna be at 33% of the top. Now let's talk about the GDX junior gold miners. So this is the chart that we shared in the middle of May on May 23rd, saying that it is getting closer to potential top. And now I'd like to say that this is a very good chance that the top is in. So this is clearly diagonal, and I don't see any other way of breaking it. So now the chances to move towards 41.85. This would be the first target. The second would be 25.80. Well, that's all I wanted to say about GDX Junior. They are not looking healthy at all. Now the final discussion of today is coffee. Just yesterday I discussed the potential of forming a bottom here, and the daily looked very promising, and even today it started with a very promising move. However, the daily closed with a hammer, and now the odds are very close to neutral. It's still slightly bullish, but very close to neutral. And on the weekly frame, we have a piercing line, which is technically a bullish candle, but instead of a bullish engulfing, well, now it's only a piercing line, which requires a very strong confirmation. Let's see how it develops in the next week. So far, it's indeed close to neutral. And this is the chart that I discussed way back at the beginning of May. So far, it is unchanged. I think that this candle might trigger a little push lower and complete it here somewhere in this rectangle, and only after we might see a continued move higher or a more extended wave. Wave B and wave C. Well, that's the perspective for coffee. And now let's move on to the wrap, to the summary. By the way, our swing room hit an all-time high today. Master trader David continues to deliver with discipline and consistency. If you are interested in joining, reach out to help@investingangles.com for an intro rate and experience the difference. And now, the summary. So precious metals and miners may be forming a very significant top. Friday's closures will decide. We'll go deeper into the dollar, rates, and other key metal sensitive instruments in this weekend strategy digest. So tune in. This could be a very important update, especially for the precious metals. Oil and gas. All signs point to a large move coming. Stay sharp. Uranium shows a mixed picture. No strong consensus among instruments yet. However, it is leaning bullish. Coffee printed a strong daily reversal just a few days ago, but hold the excitement for now. It's still unclear on the weekly. So, if you like this, share this insight in your trading circles on Telegram, WhatsApp, Discord, X, and other media. Follow us on X and Telegram, subscribe, and don't forget to hit the bell so you never miss a setup. This is Investing Angles, where we chart the charts before the crowd even blinks.